And good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, April the 18th, 2022. Just before I came on, I noticed a news story that came out, and it's right here. Peaking inflation should pave the way for a stock market breakout. Evercore's ISI predicts. A senior managing director. And I'm like, are you kidding me? Peaking inflation. How can they determine that? How can they say with certainty that we're peaking? I find it amazing that we have analysts out there that literally can tell you, oh yeah, we're done. Come on back in. Unbelievable what we're witnessing. And it again just puts into my mind, folks, that we must have a lot of firms with huge positions that they can't get out of, because to get out would sink them. And so they need the market to continue to move higher to get out of whatever they're in. That's what I'm going to say. But I think on some of it is that I believe, let me just double check, we've got IBM reporting when? Tomorrow. IBM reports tomorrow. So, and that's why this person came out, because they just like, IBM teed up. They're just ready to go. Inflation's gonna. So I think that what we're seeing now, and the fact that the market comes in, goes up, they push it higher, then they sink it. Then they push it higher, then they sink it. Then they push it higher, is just these competing forces of, hey, we're inflation's peaking. We're ready. Come on back in. Buy. IBM's first earnings are going to be great. I think it's like you don't know that for certain. So you're taking your best guess here. And I'm finding it quite amazing, because obviously people are buying it because they're coming in and they're covering and they're doing whatever they do. Now, what does this all mean, and how does this all play out with my current Elliott Wave count and where I believe we are? As I left off last night, that the market had continued for a little bit to sink. It got down to a low at, let me just put low, 13,729, and then just rallied, and it basically kind of didn't go up a whole lot. Maybe got up about 50, 60 points off of that low. And then we got to where we opened, and they just kind of walked in and went, buy it, and buy it, and buy it. And that lasted right up until we got, let me see if I can open this up. I don't need to have this battle. Come on, computer. It's kind of real interesting that it does this to me constantly. And these are new. It's not like I got an old one. So we had, that was our opening. And this actually was the opening. Then they sank it, then they rallied it, and they didn't stop until they got just above 14,000. So, but really what happened is that it got over the 50, and that produced, that just invited every other buyer, come on in now, come in now. See, we're breaking. And then when we went back down, oh, get out now, we're breaking. We're breaking, get back in. We're breaking, get back out. We're breaking, get back in. That's the type of craziness that we had today. And again, I don't think the volume was all that great, not during all this, but the buyers were forever present. And again, because now we're getting into some more earnings reports. We got the banks out, Bank of America, everybody loved it today. Hey, you guys were great. Came in a little bit better than anticipated. It's amazing how the market wants to react to things. But again, we have to allow that. We can't really complain. What really was in control again today was Amazon. Amazon doesn't report until the 28th. And we have Apple on the 28th. But I believe we have Microsoft, we have Tesla this week, and I think we have Microsoft this week. Let me just double check. No, Microsoft is the 26th. Netflix, are you reporting? Netflix reported today. And obviously didn't blow the doors off. Oh, excuse me. Netflix reports tomorrow. It was 18, they had news. So they don't care if you have a college degree or not. Go work for Netflix. Good to hear. So anyway, we have Netflix tomorrow. We have Tesla, I believe, on Thursday or Wednesday. Wednesday is Tesla. And again, hey, you don't need a college degree. You can go work for Tesla. This is getting better. And then the last one I wanted to check, Microsoft was later. Facebook. When is Facebook? Facebook is the end, the 27th. So we have Apple, Amazon, Facebook, all coming towards the end of the month. AMD in May. What else do we have? Who are the bigger boys? Google on the 26th. Intel on May 5th. Oh, that's when their dividend is. Their earnings are on the 28th. Microsoft, like I says, the 26th. So again, we still have quite a bit to go. Twitter, the 28th. So everything's being pushed out. So, but we do have Tesla and Netflix this week. So there may be in response to that, because Tesla took a little bit, but boy, did they catch fire. And then they just really started to push. And now they're bidding themselves up $4 over the close. Closed at 1,429. It's now bid 1,008.69. So this is, again, I think just getting things lined up. We'll see how that all comes out, but how do I want to interpret this? Back to the charts. So let me go back over to that hourly chart and see if this will be friendly, user-friendly, and open it up for me. It did. Great. So that being the low from yesterday evening, that's minute wave 1. So remember, we're in, if I take us back out to that larger picture, we are in an intermediate third wave down. It's going to consist of 5 waves of minor degree. Here is minor 1, goes along with that low. Then we had an ABC up, and that is minor 2. So all of this nonsense that came off yesterday in combination with some on Friday, and then, some on last Thursday, and then again on last night, is minor wave 1. So we're looking for an ABC. Here's the A, here's the B, and we're now getting the C. So let's just throw some Fibonacci retracements onto our chart and see what our limitations are going to be. Well, 382, we're hovering, we're just playing right there. That's where the 382 is. Pretty much at 48, we're up at 69, but we keep coming back and touching it. The 50 is sitting right along with it at 13,948. And we've got the 4 coming up. We've got the 20, the 8, we've got the 20, all kind of coming up. And the 50 is providing some resistance, although we're above it, but it's still providing resistance because we're not getting too far before they start to pull it back in. Here are our levels. 13,948 is 0.382, very common. But again, minute wave 2. So again, we're looking at the characteristics for a second wave. Whether it's minor degree, intermediate degree, minute degree, it still carries the same characteristics. And one of those characteristics is that it's a last chance out of this sequence. If traders really wanted to sell, this is going to be your chance. Now, most common, between 50% and 618. So between 50 and 62% of that first wave would be the retracement for a wave 2. So we actually came close to 14,015, 16. That's where the 50% retracement is. And then 14,083 is where the 62% retracement is. So we have room for them to get it back up there. In fact, we have another $100 worth of room before wave 2 might be over. And again, if this is wave A and that is wave B, this kind of is not going to be all of wave C. Wave C in and of itself should be 5 waves. And if that's 1, and this is 2, we're into a third, which will probably bring us up to here, a 4 and a 5. And these are kind of looking pretty big. So we'll see. I know we got a lot of people out there who I'm wondering why they want to spell that this is all counter to what it's actually doing. That, like saying interest, that inflation has peaked, folks. It's done. It's like, really? Glad they think so, because I'm like getting a little bit confused on how they feel and believe that way when every single number that's come out reflects an additional increase. So that's when it's like I cannot believe that the news is putting it out. But then again, it's CNBC. Any case, I think that we do have additional room to the upside. In fact, the second wave can actually come up and get close to the starting point of wave one, and that's at 14,302. I cannot exceed it because then it's no longer correcting that first wave. But it can get up to 14,133. It can get up to 14,042. 14,242. It can get there if it chooses. And once again, it's just we're playing in a box. But that's not unusual. These patterns are not unusual as we move into an earnings season. But it does begin to feel like we're just moving from one earnings season to the next. By the time everybody gets reported and we float around for a little bit, oh, we're in the earnings season, boom. Companies got to be doing great now. We've had a whole nother 3 months to have great numbers. And again, I think that what the market is failing to do is to truly, on a realistic basis, price in inflation. On a realistic basis, price in what people are going to be able to afford. On a realistic basis, price in what's going on in the bond market. Corporate America has to borrow money too. Apple's known for doing their buyback programs. A lot of these big NASDAQ stocks do buybacks. We'll buy our shares back because they're borrowing cheap money to do it. That doesn't exist anymore. Cheap money's kind of gone. Now we got Bullard coming out and saying something. Let's see what she's doing. Oh, now Bullard is casting doubts on the need for rate increases. Notice how they do this. They come out and say these things. Prior to all of this, he was like, oh, we need to do 50 to 3/4. Now maybe we don't even need that. Okay, we've got it under control now. It's nothing but BS to calm the markets. And I feel that that is just so deceptive because there's enough people that are going to toss it in and maybe lose it based on that stuff, based on, well, I don't think we have the necessary means to which we have to pull them up more than 50 basis points. Well, at least we're now talking about, first it was 25, now it's 50 basis points. But the reality might be it's going to be a point. We don't know. I think it's just better to trade day to day. I think it's better just to kind of go with what is happening in front of us. Even if you're choosing to do more of a long-term position, you can base it on what you feel the market's going to do, but there are ways to manage the trade. There are ways to trade and you put it on and then market moves and then you can get in there and make some changes and some adjustments and still make money. If you continue to play the premium game in options, that's what you're doing. You're going to continue to make money because you're not buying premium, you're a premium seller. And you can do that in a defined risk position in a spread. You can do that in legging into and putting on conversion and reversals. There are many different options available. So I don't want people to get stuck that the only way that they can make money is if the market goes up, if I play it from the long side. You can play from every which side you choose and make money. You just expand your capabilities, expand what reality is, expand the possibilities. Don't get stuck on, oh, we're bullish, oh, we're bearish. Honest to God, don't get stuck on that. You want to have the mobility to trade what's in front of you. So you can't be bullish, you can't be bearish. You're trading price action. And when the price action is going down, there's plenty of money to make. When the price action is going up, there's plenty of money to make. I have to tell you, into the close today, this is where it started. Actually, this is where it started. Nope, that's the close. This one. From there, 13,824. In within that hour, and it actually was towards the close, it got up to 13,943, 120 points. A pretty much nice stop, nonstop. Still ended up being a red bar, but it was straight up. So these things exist, and they're there, and they're tradable. Depends on what you want to do and what your understanding may or may not be. Okay, so I think we have upside room still, but I'm still looking for stronger downside to kick in. Now, we're going to have to play nice and play along with everybody else wanting to jump in advance of earnings, but we know this is how they trade. This is how they do it. But guess what happens when that happens? It increases the volatility. It increases the premium that people are willing to pay. And that is an option trader's dream scenario. Pay more, I'm going to sell, I can hedge it, things that I can do and capture that premium. In the futures market, you're just playing along with the price action. I can be as bearish as I want to be and still buy that index because my signals are telling me it's going to go up. And again, I trade off of a 1 minute. Let me just show you. Well, actually, this is an easier way. I trade off of a 1 minute, a 2 minute, and a 5 minute chart. And you trade off of these and you're catching the breaks on the moving averages. And this is $5 a tick, $20 a point, and it doesn't move in ticks, it moves in points. All right, there just traded 79.75, and within the next 10 seconds, it's traded 78.50. And then the next 10 seconds, it's trading 80. Granted, this is like aftermarket, and so the markets aren't tight, but that is seriously how this market moves. All right, back to my chart that's not moving quite as severely. So I think, yes, we have upside. Then I would be expecting, again, how do these things form? We're in a minor third wave. Consisting within that minor third wave are 5 waves of minute degree. Within that, we have finished 1. We're still working on 2. What comes after 2? Wave 3. Wave 3, longest and the strongest of the sequence. Out of 1, 3, and 5, longest and the strongest is normally the 3rd. And again, it will subdivide in and of itself. Just like we've seen in wave 1, we're seeing in wave 2. These are sub-minute waves. A, B, and then we're going to do sub-minute C. And that is how we get the building blocks. That's how we get things together and make this all work. So after that, we're going to be looking for another one of these, but it's going to be longer and stronger, and it'll be in the 3rd wave. And then we're basically looking at when Netflix and Tesla report. So Tesla on Wednesday, Netflix tomorrow. Of course, after the market, so that all works too. But we could do a wave 2, and then we get them coming out, and they don't blow the doors off. They don't even come in anywhere near, and boom, this thing goes down. And then we'll start see them selling other things because now they're going to get the feel like, oh, inflation is real, and oh, it does affect earnings, et cetera, et cetera. And they'll have to go wheel somebody else out to talk about, well, I think that's an overreaction, blah, blah, blah. You're going to watch CNBC, it's going to pull out every person that's willing to talk the market up versus the market down. That's just the way it goes. So for tomorrow, look for additional upside. But I will share with you, these sell-offs were strong. They were extremely profitable, and they just happened and they kept going. This one in particular just kept going and kept going and kept going. As far as this market was, it was like very oversold, and it kept going and it kept going. And then once they turned it, then it kept going and it kept going and it kept going and it kept going all the way back up. So that's kind of how the market traded today, but both were good and both just continued. So ample opportunity. Now they're just going to stand here and buy this thing. They're just pushing it up higher and higher, but that's just the way it is. So again, downside moves because of the increase in volatility, not all that much if you looked at VIX, VIX was actually down, but that's because the market basically was up for most of the day. So again, both sides are experiencing an increase in the velocity to which the market will move in the direction that it's going. And that's what's also picked up, the speed. So be careful, understand if we break the 50% and we can get a good break above it, then it's more than likely heading to the 618, which is 14,083, and then vice versa. We're still not that far away from that 50, but it's a nice break, but it's not that far. We likely will drop back. It should continue to provide support pretty much all night until we get back there tomorrow morning. Breaks will drop it down to the 8 and the 20. A break before the 20 opens the door for this thing to drop very cleanly and very steeply. All right. That's how the moving averages come in. We are in a money flow. We're kind of like a lot of money flowed back in. End of the day, all of the funds re-upping their long positions. And that pulled us out of the doldrums and put us back into, on a 1 hour chart, stochastic or the RSI. Yeah, it's strength, but it's not like kicking your butt strength. So a lot of things are still in there. I still believe we're in a correction. I still believe that correction's got a whole lot more to go. All right, I'm going to end it there. Have a great trading day tomorrow, and our next update will be on Tuesday, the 19th.